Hi friends, this is Kishore. Welcome back to my channel. Today I'd like to cover market analysis, crypto ETFs approved, bond auction results, CPI and PPI data analysis, US and UK strike, economic calendar, bank earnings analysis, and next week earnings calendar. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. Fear and greed index it came to the 71. We know that last week it is 72 because the market is choppy. The greediness came down from 72 to the 71. And this is weekly heat map. Technology sector, communication sector performed really well, and Amazon also performed really well. Tesla down more than 7%, and BA is down more than 12%, and healthcare also down, and also the banks also down this week. And this is weekly heat map for the ETFs. All the ETFs performed well except the inverse one. And this is sector performance. The left side chart is the last week, and the right side chart is the this week. So we can clearly see here the last week energy sector, financials, healthcare, and utilities performed well, and this week exactly the opposite. Energy, financials, and utilities are down. Only healthcare is down last week and this week. This shows literally the sector rotation of the money from one sector to the other sector. And this SEC approves Bitcoin ETFs for everyday investors. So SEC approved more than 10 BTF crypto ETFs. Let's see how they do next couple of months. It's too early to call it they do good or they do bad. And this is CPI data. CPI data came more than the expected one. The consumer price index increased 0.3% in December and 3.4% from year ago, compared with respect to estimates of 0.2 and 3.2%. So the CPI data came more than the expected. The main reason is the higher rises shelter costs. So we know that FOMC meeting notes also in the last week I mentioned, because of the higher home prices, the inflation is still stays high. So the same thing is happened reflected here. So oil crude oil price came down, and it helped inflation to come down. And also if you higher shelter cost comes down, that helps the CPI data to inflation to goes down. And this is US consumer price index chart. We can see all items is thick blue color, and less food and energy is dotted lines. So the thick blue is little bit raised 3.4%, and dotted line is same like 3.9%. And this PPI data came better than the expected one. So that is good because that helps the CPI data. PPI is the leading indicator of the CPI. So PPI went to minus 0.1, which is nice. And this is Fed Watch tool. The probability of Fed rate cuts for the March, the rate cut of 25 base points increased it to the 76.9%, which is good compared to the last week. This week, the probability is increased. And this is bank results. So JP Morgan and Chase given really good Q4 earnings results, but the Bank of America given the mixed one kind of. They given the earnings per share above expectation, but revenue missed. And Citigroup given the worst results, the unexpected quarter loss, and also unveiled plans to 20,000 jobs cuts. So the bank earnings are mixed. So JP Morgan given better results, Bank of America is almost same, is okay, and Citigroup is bad. So next week a lot of bank results are coming. Let's see how they do. And this US and UK strike amidst Houthis after Red Sea ship attacks. So this put a lot of pressure on the oil price, and it went up above $80 per barrel. So oil prices rose more than 4%, with Brent climbing above $80 and a barrel for the first time since late December. So because of this airstrikes, so the oil price went up. If the pressure continues, then oil prices shoot up, and we can see the oil price stock in few slides later. And yeah, here itself. So the crude oil right now it is in the choppy mode between the 70 and 76 or 77. So if it breaks, and I see the CSA is going up, which is a positive sign, it's bullish sign. And if it breaks 76, then it goes up to the 80 or 85 easily. So that's my expectation only. So let's see how we do this week. And this is bond auction. So this week 30-year bond auction performed, got very good demand. And at the sale of government debt that matured in 30 years, investors were awarded 4.229 percentage in yield. So initially they thought like 4.3%, but the yield came down to the 4.229, which is a good demand for the 30-year bond. And this is a TLT weekly chart. So it went up from 80 to 200 pretty fast, and then it reversed it here. We can clearly see here is the shooting star. And last week is the bearish candle, and then to this week it is little bit kind of a dozy kind of thing, a reversal. And it is at the 0.236 level of Fibonacci level. If it holds at 96, then again it can bump up. And the volume is good, and the bond action got the really good award, good demand. So I'm expecting next week it may go up. If it goes down, then 93 is the next support. and this is TLT daily chart. So right now it is going to some sideways. It should break this range, and CC is also at the oversold region. So if it goes up, then it is good for the TLT. And this is next this week earnings calendar. So this one is like Jan 16 on Tuesday. We know that 15 Monday is holiday. So Empire State Manufacturing Survey, this is one of the important, and also retail sales and industrial production and Fed Bees book. So Fed Bees book, I follow this book because it has a lot of information about the economy and the inflation and everything. And next, and on Thursday on Jan 18, initial jobless claims. This is also important one. Market reacts like anything, and housing start building permits. This helps to understand how the housing market is doing. Consumer sentiment is important for to know where the recession, possibility of recession or not. And existing home sales, again, this is also the housing index, housing related index. And next week earnings, most of them are bank earnings, and one of the important is Melly. Melly. So this one is e-commerce. So I'm interested on this one, how it will do, because the sales, the retail sales, I think the retail sales is good in the last quarter. I mean December. So I'm expecting it will go up, but just in expectation, and let's see how it do. And this is the number of stocks above 20-day moving average in S&P, S&P 500. So we know I follow this one. If it hits 86, it's like a sell signal, and if it goes to the 14, that's a buy signal. So compared to the last week, it came down from around 55 to the 46. So let's see how it do. I'm expecting it may go down. I'll show the reason why. And this is 21-day equity put call ratio. Again, it is in the sell side, sell signal. So it given the sell signal and last year August, and again it given sell signal in January. And this is January calendar on 19. It's a OPEX week, OPEX day. So in general, OPEX week is a little bit bearish. So even though it is a short week and 19 is a OPEX week, OPEX day, lot of volatility in the market we can see. And this is the uh, trifecta, January indicator trifecta, which is SCR is Santa Claus rally. This year it is 0.9% negative, and also first 5 days in the January like minus 0.1%. So both are down, and JB is a January barometer. If it is also down, then we can expect this year going to be either sideways or the bearish. If January performs well, I mean at the end of the January, if SPY is positive, then we may expect some bullish sign of this year. So this is just an indicator kind of thing I use, but most of the thing I'll follow is monetary policy, how the monetary policy impacts the market. And this is SPY weekly chart. We can clearly see here it is negative divergence. The prices went up, but the CSA is having negative divergence, and also the RSI. So some negative divergence in the indicators is concerning me at the near to the all-time highs. And also you can clearly see here it's a positive divergence here in the June of 2022. So the price went down, but the CCI and the RSI went up. So this is given a bullish divergence. So that's the reason the market went up. Now it is giving the negative divergence. So I'm a little bit concerned here, until unless it closes above 480 or 485. We do not know. And this is SPY daily chart. So last 3 days it is going sideways, and if it goes down to the 473 is the one I'm looking at. It's a 21 EMA. If it breaks, then we can go to the 470 or 466. If it holds the 473, then we can see 480. And this QQQ weekly chart, again, last couple of weeks it's going the sideways, and I see the negative divergence in the RSI. So similarly here we have the negative divergence in the RSI, and it went sideways, and then it took a hit. So but we do not know right now how it goes. But if it goes above 410, if it closes above this choppy box, then it is good for the QQQ. Otherwise, if it goes down, then again we can see a little bit downside. And this is QQQ daily chart. So my targets are 405 and the support, and 410 is the resistance. And the again here 405 is a 21 EMA. I'm looking at this one. It should hold here. If it don't hold here, then we can see a little bit downside on the QQQ also. And this is IWM weekly chart. Again, the IWM came back to the within the choppy range. So almost more than 1.5 year, it is in this choppy range. So I thought this time it will break and it will go up, but 2 weeks back it made a shooting star, and then last week it is a bearish candle, and this week it is a kind of dozy. But the volume is going up. Last week and this week is almost same, but last week is short week and this week is full week. But even though the volumes are up, so and CSA is going down, RSA is going down flat. So some kind of mixed signals here. Volume is up, CSA is going down, and RSA sideways, and the doji candle. and IWM right now it is in the sideways. So, but the CSA is in the daily chart. It's in the oversold region, so there may be chance to bounce. But I'm looking at this choppy bounce to break to the upside for upside, or if it breaks to the downside, then we can see a little bit more down on the IWM. So my support is 189 and the resistance is 200. And the summary is market is in choppy mode with negative divergence, which need to be a little bit cautious on the long side. And OPEX week is seasonally bearish week, so we need to be the chart is showing bearish signs, and the OPEX is seasonally bearish, so we need to be a little bit cautious on the long side again. And CPA and PPA, that is bumpy. We see that CPA is went up and the PPA came down, so it's a little bit bumpy, and that's the reason market is also choppy. And Santa Claus rally and January first 5 days are closed red. So now all eyes on the how the January barometer would be. If it closed red, then we can expect a bearish here or it is a sideways. And bank earnings are mixed. We see that JP Morgan, Citi, and Bank of America results are mixed. And next week, a lot of banks are going to give a lot of results. Let's see how the bank results would be in the next week. That's all for today. Hope you like this video. If you like this video, please hit the like button and please watch more videos in my channel. If you like them, please subscribe. Please share this content if any of your friends looking similar kind of content. Please hit the bell icon so that you'll get notification when I upload a new video. Thank you so much. Bye bye.